Is the AI bubble finally bursting? Today, as somebody who works for a trend-finding company, I'm going to give you an insider look. At Exploding Topics, we track thousands of startups, products, and trends, and here's what's baffled us. In August, the interest in AI was as high as it's ever been. It was hard to ignore. Anything connected to AI was going nuclear. To prove this, let's play a game. Which of these is not a real AI product or service? The AI crib, the AI cat door, the AI grill. I'll give you time to think about it. They're all real. So you can imagine our surprise when come mid-September, we saw a sharp downward interest in AI across the board. For example, major AI topics like AI transcription, AI meeting assistant, and AI analytics are all taking a dive. Once promising and useful topics like AI legal research, AI personal trainer, and AI interior design are falling as well. Companies like Slang AI and Draft AI that seemed destined to be empires, securing tens and millions of dollars in funding, are all now tanking in searches. This was so unexpected, I thought something was broken. I talked to our engineers and they said everything is running smoothly, all this data is accurate. And our engineers are pretty amazing. So, what's happening with AI right now? I'm going to show you a few things that'll help you understand what's going on in this industry so you can stay ahead. First, AI searches are decreasing overall. After this insane frenzy of interest in 2022 and 2023, public attention to AI topics are dropping really quickly. Google Trends and Exploding Topics are both showing that searches for terms like AI meeting assistant, AI transcription, and AI legal research have peaked and plunged in recent months. Even highly touted niche applications have gone through this up and down. AI interior design searches had exploded over 3,000% in 2 years, but this growth has since gone down. So one reason is that users are frustrated and they're dropping AI. After reaching 100 million users in record time, ChatGPT usage dipped over the summer of 2023, with worldwide visits down nearly 10%. Experts suggest it might be because the novelty's wearing off. Now you might think that maybe this dip was due to summer break, where fewer students are using ChatGPT, but even beyond seasonality, it seems like people are realizing that there are serious limitations to these tools. Issues like made-up data or bland generic outputs can make this user experience super frustrating. In one survey, 77% of employees said AI tools increased their workload instead of reducing it. Skyrocketing costs and eye-watering expenses. Basically, the cost of deploying AI is mounting. Running advanced AI models requires a huge amount of computing power, which costs a lot of money. OpenAI CEO Sam Altman has bluntly described the cost of operating ChatGPT as quote-unquote eye-watering. In fact, about 55 to 60% of OpenAI's entire $9 billion in operating expenses for 2024 are just cloud computer costs. And that share is projected to climb above 80% in 2025 as usage grows. Part of the reason is this so-called NVIDIA tax, the price of the specialized AI chips. High-end GPU hardware that might cost $5,000 to make sells for up to $20,000 to $35,000 a piece to AI companies. In order to account for some of these costs, companies are moving to subscription models like GPT, which is like $20 a month. And that attracted over 1 million subscribers just in the US. And now, even big companies are dropping AI. After this huge rush to generative AI, a lot of companies are hitting a wall in turning all that hype into actual value. According to S&P Global data, the share of companies abandoning most of their AI projects jumped to 42% in 2024 to 2025, up from only 17% the year before. Also, a recent MIT study found that 95% of enterprises saw zero return on their generative AI investments, despite spending $30 to $40 billion collectively. As one tech CEO lamented on The Economist after pouring money into AI, his clients are asking why it's not happening and where are the results. Coincidentally, I have the same reaction whenever I go to the gym. Okay, so what is going to happen? Many believe AI has entered the trough of disillusionment phase of the hype circle, which is a fancy way of saying that the rose-tinted glasses are off and people are seeing red flags. After this period of grand promises and no immediate results, we're starting to hear more sobering assessments. We've also got bubble warnings and dot-com parallels. Part of the reason behind this pessimism is the existence of these precedents. Back in the late 90s, internet stocks soared on hype before crashing hard, which came to be known as the dot-com bubble. So are we in the AI bubble? Online search interest in AI bubble has gone up, then down, which some interpret as a sign that we may not be at the true peak yet. Bubbles are not a neat, linear process. Deutsche's Adrian Cox explains, markets often continue climbing even after people start using the word bubble. In fact, Cox notes that in 1999, the NASDAQ actually doubled after everybody knew that the tech bubble was underway. Bank of America analysts agree, writing they expect a bigger bubble will emerge from AI before it's over. There's even speculation that the mania could continue into a final blow-off phase, potentially pushing AI-heavy stocks higher for longer. And this is how I like to deal with my own problems. It's all future Ben's issue. Of course, the flip side to that optimism is the implied bust that follows, and veteran investors are bracing for a reckoning. One investment firm cautioned that the fallout from an AI bust could be worse than those of the dot-com era, as its scale is just far greater. So according to the pessimists, either the bubble bursts now, or later when the consequences are much bigger. None of these options seem great, right? So let's talk about market growth forecasts versus reality. So what are the optimists saying? Many analysts still project robust growth in the AI sector, just maybe not as instantaneously as all the hype suggests. For instance, one forecast estimates the global AI market will expand at 19% annually to reach $3.7 trillion by 2034. For any trend, whether it's a product, a company, a topic, that percentage growth is high. That's significant. There's similar optimism for subfields like generative AI, which one firm predicts to reach $368 billion by 2030 in market size. Now, these projections assume that AI adoption in healthcare, finance, retail, and beyond are going to continue, even if that initial hype starts to moderate. And indeed, while venture capitalists have grown more selective, they are still investing heavily in AI's long-term potential. In the first half of this year, of 2025, over 64% of all venture deal value in the US was AI-related startups, including some staggeringly large investments. This dichotomy shows that experts are split. On one hand, skeptics highlight the lack of short-term ROI and the risk of this hype crash. On the other hand, believers highlight this AI transformative potential and continue to bet big on its future. So the consensus, if there is one, is that we're in for a bumpy ride. Some investments will collapse, but it seems like the overall trend of AI improving and integrating into the economy is still moving forward. So let's talk about the future and what this means for you, for brands, for all of us. So as the hype cools, consumers can expect fewer of these new AI-powered features being rushed to market simply for the buzz. Instead, companies are going to start focusing on AI where it actually adds value. Some free AI services are likely to become paid or much more limited as these companies grapple with these crazy AI costs. If there is an AI service that's relatively cheap right now that you've been wanting to try out, now is definitely the time to do it. On the other hand, AI tools that actually remain are likely to improve in their quality as the industry starts to prioritize fixing the AI's flaws rather than just hype and expansion. Now, for businesses and for brands were super quick to jump on the AI bandwagon. And now we're starting to see this strategic pullback. Brands are asking the hard questions, like, is this actually improving our product? Is this worth the cost? And the data on AI project failures is going to surprise you. The CEO of Klarna, that giant buy now, pay later fintech company, admitted he went too far using AI to replace customer service reps and had to rehire humans because the AI solution was not up to par. Incidents like that on that scale sent a huge message to other businesses. Don't implement AI just for the sake of cutting corners or cutting costs, especially when it impacts the customer experience. On the other hand, when it comes to applications where AI really shines, say real-time transcription, fraud detection, or certain types of data analysis, companies will continue to invest because those can improve service when it's done right. Another consideration for businesses is the increased regulatory and legal scrutiny on AI. With regulators warning that there's no AI exemption to consumer protection laws, companies have to ensure that their AI features don't, for example, spew misinformation or misuse user data. And that might slow down the implementation of AI across websites, especially as legal teams step in. For example, let's say that your kids have an AI toy and that AI toy starts talking about how much fun it is to light fires. Regardless, bubble or not, AI is here to stay. For everyday users, for companies, sure, this is a reality check, but it's not the end of the story. And it is reminiscent of the dot-com bubble burst aftermath. The absurd dot-com stock valuations collapsed, but the internet itself obviously didn't go away. It simply matured and was integrated with everything. So we're probably going to see a similar trajectory with AI. The overhyped and unsustainable players will fall, but AI applications that provide real, true value are going to stay and continue to grow. In fact, a lot of AI's impact might be more behind the scenes. Better recommendations, smarter search results, improved medical diagnostics. Financially, a bubble burst could mean lowered stock prices for these AI firms, and maybe a slowdown in new AI-heavy startups. But that could also free up more talent and resources to use to solve real problems using AI, rather than just chasing this investor hype. As one Harvard researcher put it, even as the generative AI bubble deflates, its effects, both good and bad, will linger and shape how we use tech. The hope, the real hope, is that after the hype, AI enters a more sustainable and useful phase, woven into daily life in a way that really actually helps people, but without all the fanfare. But right now, both users and brands should buckle up for a period of instability, adjustment, and introspection in the AI world. So what do you think this means? Could we be seeing another 2008 housing crash, but in AI? Let me know what you think in the comments. And if you're looking for any specific trends in a niche, just drop that niche below, and I'll give you a trending topic totally free. For more news and updates on the situation with AI, both for brands and consumers, make sure to hit subscribe because we're going to go into a lot more of these topics as we dig up the data. Thanks so much for watching. I'll see you in the next video.